Hi guys, in this short video, I'm going to briefly discuss lot sizes, margin, and leverage, as these are terms that you will be confronted with very often when talking about Forex or trading. Now, what we'll cover are what are lot sizes, what is margin, what is leverage, lot size, margin, and leverage formulas, mainly for interest sake. Now, what are lot sizes? The lot size is the way you can determine what each pip you earn will be worth. When you place a trade, you have to trade in little currency blocks. These little currency blocks are called lots. A lot is a certain size of the currency being traded, equivalent to a certain dollar amount. There are three basic lot sizes: a micro lot, which is $1,000 worth of currency controlled, a mini lot, which is $10,000 worth of currency controlled, and a standard lot, which is $100,000 worth of currency controlled. Now, let's look at an example. What are the lot sizes worth in the Euro-USD pair? One micro lot is worth $0.10 per pip. A mini lot is worth $1 per pip. And a standard lot is worth $10 per pip. What is margin? Basically, this is how much you need to put up. Margin can be considered as a security deposit. Margin is multiplied with leverage to get the lot size. Margin is actual money that is in your account. Your broker will take the margin and segregate it during a trade, but you will get it back if you win or lose. What is leverage? Because the market moves in such small amounts, we need to magnify the trade sizes to earn a good profit. Leverage can be considered as the trade size multiplier. The broker lends you the additional capital, although no money changes hands. Brokers can offer a wide range of leverage, anywhere from 10 to 1 to as much as 500 to 1. US brokers are limited at the stage of this video to offering you no more than a 50 to 1 leverage. Now let's have a look at some of the formulas. Margin times leverage equals lot size. To find the lot size equals margin times leverage. Right? To find the margin is lot size divided by leverage. And to find the leverage would be equal to lot size divided by margin. That's all for this short video, guys. See you in the next one.